Good morning, everybody. Hey, hope you're doing well. Yesterday was a bloodbath, worst day we had this year. I hope you didn't pay too much attention to it, but it is some indication of what's going on across the board. And so, as we get started today, again, I want to remind you of the different reports that we have available out there right now. Let's talk about the main report, which is going to be the market correction report. All you have to do is text the word market to 863-285-3815. The other one that I think is important is retirement. All you have to do is text the word retirement to that same number, 863-285-3815. Folks, listen, retirement's a one and done deal. All this volatility, if you think you're going to get your income from the stock market, you need to think again. You need to get this free report on retirement strategies. Do it right now before you forget. Hey, Dave will be with us. I'm sure he's going to have a lot to talk about. The futures are going crazy today. Hang tight.
105.7 Light FM. Eddie Money there. Morning Dave is here, and it is time, much as some days we wish we didn't have to tell you what's happening with your money. 401k IRA, even your savings account gets affected by what we talk about this time of the morning. Let's go downtown to the offices of Statler Financial Services. Phillip Statler standing by, and boy, howdy, what a day yesterday on Wall Street, Phillip.
Yeah, Dave, we thought Monday was bad.
Yeah.
Yesterday was absolutely the worst day for 2019.
If you like Monday, hold my beer. The Dow was down by 800 points yesterday. NASDAQ was down by 242. Standard & Poor's down by 85, just shy of 86. 3% plus on both the Dow and the NASDAQ. And the S&P was pretty darn close to 3% down in one day. And all the analysts I read anyway said it was because of that inversion on the interest rates when the 2-year rate got low, ended up getting above the 10-year rate, and that made everybody pretty much change underwear for a day, didn't it?
Yeah, it did. It definitely did. And that's one of the things we keep talking about. And what's it really mean, and how long does it have to stay there before it really means anything? Those are questions that all the economists bounce back and forth, and they don't necessarily agree with each other. We talked yesterday about how that inversion curve that we were seeing it didn't mean anything immediately, but it put some speculation out there that we could head into a recession within the next, they say average 22 months. So, but what does that really mean? Now, we don't know. We have to just keep doing what we're doing and kind of hope for the best, but be prepared for the worst situation that could happen.
And that's always the best advice. Expect the best, but prepare for the worst, and that pretty much covers all your bases. I was reading the same thing last night while I was looking at it and saying, "Oh my God, what's going on?" The spread of opinion is really all over the board. How long the inversion in interest rates needs to last before it becomes a slam dunk sign of a recession ahead. But boy, just touching it yesterday, that was more than enough to scare investors into selling stocks like chiclets.
Well, we're back to touching it again. I'm looking right now, the 2-year Treasury's at 1.555. The 10-year Treasury's at 1.556.
That's about as close to being tied as you can get, but it's the wrong direction off of tied, rounding in that direction. So we'll find out. Start out the morning with some good news as far as the federal reports are concerned. Retail sales, a surprising jump in July. You and I have been talking about the big box retailers and the brick and mortar retailers that have just been getting slammed on their quarterly reports. Well, the money's going somewhere because we spent 0.7% more in July than we had, and that was about twice as big an increase as the analysts expected.
Well, I wonder if, and this is just, the Southeast, I think probably, but I know, we go back to school a little earlier now than what we used to. And so I wonder if the tail end of July, we didn't see a big push of back to school shopping that may have helped those retail sales numbers.
They very well have. Something bumped them up anyway. The money went somewhere because, we're looking at Macy's getting creamed on their quarterly report, Sears closing stores, Penny's having a crummy quarterly report. The brick and mortar stores is flat out having no fun. Something good happened last month, and I'll be happy to credit back to school with it.
Well, yeah, unfortunately, it's not showing up in stock prices, is it?
Not yet, anyway. I'll give it that much. The other thing that we watch each month, or each week rather, is the first-time unemployment claims. Gives us an indication as to whether or not the employment situation is slowing down. 220,000 first-time claims in a week. Still a sign of a darned healthy economy, but it was a little bit less good than the market expected, I gather.
Well, it was. They expected 212,000, and I think it's the biggest increase we've seen in 6 months, as I think I saw the ticker tape say. But again, you and I talk about where we at, and we start adding all these little things together, and it gives us some indication. And that's just one more piece of information we have to put on our chart and say, okay, add that to everything else, and what does that mean our economy is doing?
Yep, and it's giving us kind of a rapidly colorizing picture of the economy not tanking, but pretty certainly slowing down just a wee bit anyway. Productivity, I didn't see that number, but you saw that worker productivity was up last month, which is auguring well for the stocks that we trade.
It is. I mean, I was surprised. The productivity increased by 2.3%. It was only expected to go up about 1.5%. So I think that was a pleasant surprise when you start looking at that one.
Understood. Anybody that's been listening to my top of the hour network news has heard stock futures are down, stock futures are up, and then finally last hour they said stock futures are all over the place because it's been a wild night on the futures market with a 400-point swing on the Dow futures, and neither one of us have really seen what could have caused it. I don't think there's anything heavy over the international front, except China saying that they're prepared to use military action in order to quell the dissent in Hong Kong. That might very well be a piece of it. But, boy, we went all over the place overnight, didn't we?
Yeah, we did, Dave. I mean, I woke up this morning at about 4:30. I looked at my ticker tape there, and it said, we're positive. I was getting ready to leave the house to come to the office, and I looked again. It was significantly negative. I get to the office, which doesn't take but 15, 20 minutes, and we're back positive again. So definitely it's been all over the place this morning, and like you said, I don't know why.
Well, but the only thing I can think of is probably that's about the time that China made the statement that they were prepared to use military force in order to quell the dissent in Hong Kong. They haven't. But they've got an aircraft carrier off the coast kind of showing a military force and a show of strength off there. That might have made people jittery, but the fact that they aren't doing anything, then we turned around and said, no, well, let's go back positive for the moment. Any indications that we've got out of the individual companies traded as we kind of get toward the end of earnings season?
Well, we do have some, but I want to bring this one up first before we get started. GE is dropping significantly this morning. I guess the gentleman, Harry Markowitz, that he was kind of the whistleblower for the Bernie Madoff deal.
Mm-hmm.
He's calling GE right now a bigger fraud than Enron.
Huh?
Well, he's looking, I guess he's digging down the financial statements. I don't know why. I haven't read the article, but that headline, he's got to be looking at, in Enron, the deal is they had off-balance sheet accounts. And so I'm not sure where that's coming from. I haven't had a chance to read the article yet, but I found that kind of interesting this morning.
It's certainly costing GE stock some numbers. I mean, they don't have a big stock price anymore to begin with. But when an $8 a share stock starts dropping by 5%, that's a big drop in a much smaller company that it used to be's net worth.
Yeah, it really is. And so after we get off, I'll get a little chance to kind of read it and see what the deal is, what he's talking about. But we do have some individual stocks. Probably the biggest one coming out this morning, Walmart.
Yeah.
Walmart reported they beat by 5 cents a share. Revenue also beat forecast. Same-store sales did well. They came in at 2.8% better than the 2.4 that was expected. They raised their full-year sales forecast. So Walmart is booming. It's up 6.6%. I think I saw a headline last week. The only person that's really making money off of this whole China deal is Walmart, because they're poised and big enough to do it, I guess. But I thought that was kind of interesting.
Oh, they had a good back to school at the very least, or we're expecting it based upon guidance, right?
Exactly. So the next one I have is Tapestry, and that name doesn't really ring a bell to me, but it's Kate Spade, and it's a couple of those other high-end um, uh, accessory type companies. They meet what was expected. They're expected to come in at 61 cents a share, and that's exactly what they did. The revenue, however, was a little bit below what was forecasted. And so, that's all right. They're part of Coach Group, Kate Spade. Kate Spade just didn't do as well as expected. They're down significantly this morning. They're down about 7.5%.
Now, what was that guidance that did it? I mean, a little miss wouldn't give you that kind of a big drop normally, unless the stockholders are really nervous about the retail reports.
Well, they're just saying that the Kate Spade sales didn't meet his expectations. So in the little report I have right now, that's about all the indication I have, is maybe they don't see it getting any better either.
Okay, they're right toward the top of my big loser list, which is why it caught my eye.
Yeah, and right now they'll open at a new 52-week low at the rate they're going.
Ouch. Anybody else?
I do. You know, we talked about JCPenney's, it was either earlier this week or last week, about being possibly delisted. And they had a good quarter. I guess you'd say it's a good quarter. They lost a lot less than what was expected. They lost 18 cents a share. They were expected to lose 31 cents a share. They did miss significantly on same-store sales, though. They were down 9% compared to the 5.2 that was expected. But I guess people are liking the fact that they lost less than expected, because they're up 17.5% this morning. Now, let's don't get that way over excited about that. It's it closed yesterday at 57 cents a share, and right now it's at 67 cents a share. So up 10 cents.
It's hard to laugh at a neighborhood store that works in our community, but when you look at one of the great names and we talk about them trading between 50 and 70 cents a share, it really kind of hurts, doesn't it?
It really does. You're so right there. Hey, the last one I have is Cisco Systems.
I noticed them on one of my lists. I was kind of curious if they reported.
They did. They beat by a penny a share. Revenue came in line with what was forecasted, but they're giving some revenue guidance that's not being helpful right now. That's below what's expected. They're saying the impending U.S. tariffs and Chinese deal, that's going to cost them significantly, and so they're trading down 6.5% this morning.
I was going to say, I knew there was another shoe to drop there, because they were on my loser list, and all you had was good news for the first two macros that you were mentioning on them. Well, resetting the table for this morning, it was a crappy day yesterday on Wall Street. No two ways about it. Everybody was down one step either side of the 3% mark. It's been upsy-downsy overnight on the futures. 45 minutes before we start trading, Phillip, can you give me some green ink this morning?
Right now it is green ink. I don't know how long it's going to stay, because it's steadily going down right now. As every time I take a breath, it goes down a little bit more. So the Dow is at about a half a point, 107 right now is the upside. The S&P 500 is up 0.4%, $11.55, and the Nasdaq's up 0.4, also 29.75. Gold and silver both trading down. Silver by 0.1%. And then crude oil is trading down also 0.75% to $54.82 a barrel right now.
All righty. The interest rates we mentioned earlier, the 10 and the 2-year Treasury notes are darned close to each other. The 10-year note just ticked up a little bit on my ticker, so we're watching that inversion. World markets, the Asian rim was mixed. Japan was off. Curiously, the Hong Kong market closed up this morning. European indexes generally down midway through their trading day. Phillip, if guidance were ever needed for trying to get a strategy to weather through this up and down market, this would be the time where it's useful. How do I find you on the phone?
Dave, they can give us a call at 382-0037 to schedule one of our financial X-ray analysis of their current portfolio to make sure they don't have too much risk. Hey, the other thing I want to say is that, look, if you're depending on the stock market for your income and retirement, maybe you need to think again. We've got a free report on retirement strategies. I think it's very important to folks, and you can get it by texting retirement to 863-285-3815. And then join us every weekend, Dave, for the Statler Financial Radio Show, 6 a.m. and noon on Saturdays, 10 a.m. on Sunday mornings on News Talk 730 a.m.
All righty, and back again here tomorrow morning, same time on Light FM. Phillip, thank you so much, sir. I'll see you tomorrow.
All right, buddy. Have a great one.
Be well. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I want to thank you for joining us today. Again, if you are 5 to 10 years out from retirement, I think it's vitally important that you don't depend on the stock market solely for your income in retirement. Get our report on retirement strategies by texting retirement to 863-285-3815. If you like what we're doing, please like our page, Statler Financial Services, and share this video with your friends and family. Have a great day. I look forward to speaking to you again tomorrow.